Good morning, everyone. Good morning, Director General Hallock, distinguished guests, esteemed colleagues, and valued stakeholders. It is both an honor and a privilege to welcome you to the Financial Services Commission's, the FSC's, inaugural participation in World Investor Week 2024. This global initiative, led by the International Organization of Securities Commissions, or IOSCO, underscores the critical importance of investor education and investor protection, two pillars at the heart of our missions as securities regulators. Belize is proud to stand in full alignment with IOSCO's global efforts, and today marks a significant milestone for the Commission as we continue to strengthen our role in safeguarding investor interests and promoting informed financial decision-making. My name is Sean Gordon, Policy Analyst at the Financial Services Commission, and I am truly honored to have that opportunity to address you ahead of my esteemed colleagues, Ms. Teresa McFoy and Mr. Jahim Francois. Today, we will share the impactful work that the Commission has undertaken to enhance investor awareness and investor protection, initiatives that resonate deeply with this year's theme of being a smart investor. As we move forward in this important dialogue, we invite you to engage with us, to explore the steps that we are taking, and to join us in our commitment to building a safer, more transparent, and inclusive financial landscape. Welcome, and thank you for being here. Just a few housekeeping matters before we progress with the presentation. There will be a dedicated Q&A session at the end of the presentation, but throughout the presentation, please feel free to place your questions in the questions tab, and that is to the right of your screen. So again, please feel free throughout the presentation to place your questions in the question tab that is to the right of the screen, the lower right that is. As a regulatory body, the Financial Services Commission regulates the non-banking financial services sector in Belize, particularly for those services provided by entities licensed or registered under the Financial Services Commission Act, the Municipal Securities Act, and the Securities Industry Act, the SIA. At its core, the FSC is mandated to protect and enhance the reputation of Belize as a financial center, foster the development of fair and efficient capital markets, and also protect investors from unfair, improper, or fraudulent practices, to name a few. As mentioned previously, the Commission is guided by three governing legislations with respect to securities: the Financial Services Commission Act, the Municipal Securities Act, and the SIA. The Securities Industry Act, or the SIA, really mirrors the Financial Services Commission's core mandates and functions. Under the Financial Services Commission Act, stakeholders can be licensed for carrying out accounting services, bill paying services, to be a registered agent, and so forth. For the full list of these license categories, you can visit our website for further information. Similarly, under the SIA, or the Securities Industry Act, some of the categories of registrations are dealing securities as principal or agent, managing securities, and advising on securities. So, how did the SIA come about? Previously, Belize did not have any legislation that covers the full scope and matters that international standards expect for securities. Really, for an extended period of time, securities business took place within our jurisdiction without any real oversight or supervision. With that, it was later established that the FSC would be responsible for the administration of the new securities legislation and regulations. The Belizean Securities Industry Act, the SIA, was published on November 30th, 2021, with its administrative functions being brought into force by way of commencement order, specifically Statutory Instrument number 156 of 2021. Its accompanying regulations came into force on January 1st, 2024. As we progress throughout the presentation, we'll make frequent reference to these legislations. So getting back to today's theme, smart investing, a guide to navigating the securities landscape. One may ask, what is smart investing? Or rather, who is a smart investor? I'll now pause briefly to share a poll, and again, this poll can be found to the lower right of the screen. I'll give the audience 2 minutes to quickly answer this to really gauge your knowledge of smart investing. So really the poll reads, which scenario best captures smart investing? So option 1, Sean liquidates his entire portfolio based on the news report. Option 2, Marlon subscribes $50,000 in the Belize City Council bond based on a discussion with a friend. And the third option, Leanne holds a long position in BL stock based on extensive investment analysis. And yes, the correct answer would be the third option, which is that Leanne holds her long position in BL stock. So again, thank you for your participation in that poll. So what is smart investing? At its core, a smart investor is one who makes well-informed financial decisions to both maximize their returns while effectively managing their risks. It involves a strategic approach to growing wealth based on research, risk assessment, and disciplined actions rather than making impulsive or emotional decisions. Put differently, smart investing is really making sound financial decisions. Investing is often confused with speculating, which is rather a gamble. Here at the Commission, our regulatory approach follows a disclosure-based system. By that, it means that we intend to provide investors with as much information as possible so that they can make sound financial decisions. In other words, make smart investments. So, what are the principles of smart investing? First, you have to know your investment. Legendary investor Warren Buffett told his shareholders at the 2019 shareholder meeting that they should only invest in what they know and expand their circle of competence if they can. So you don't invest in what you don't understand. You must understand your investment's potential for capital appreciation, the risks involved with your investment, how macroeconomic trends impact your investment, and so forth. Smart investors diversify their investments. In other words, you never put all your eggs in one basket. This way, investment risks can be spread out over time. Smart investors make rational decisions. As alluded to earlier, smart investors make sound financial decisions. As such, their decisions are well thought out. And lastly, smart investors focus on sustainability. Smart investing is not a narrow focus or one-dimensional phenomenon. It is a long-term phenomenon that focus on capitalizing on the power of compound growth over time. With that said, what securities are available for investors to invest in? Generally speaking, we could categorize these securities in 4 different unique buckets. First would be equity, and equity represents ownership. So an example of this would be shares, and they are typically paid a dividend or percentage periodically. So in the poll earlier, the example with one example would be BL shares. The second bucket would be debt securities, which is really money borrowed by one party from another in agreement to repay the principal or initial amount, usually with interest over a specified period of time. Again, from the poll earlier, an example of this would be the Belize City Council bonds. The third bucket would be derivative instruments, and derivative instruments are financial assets that derive their value from the underlying asset. And examples of these would be options, futures, contract for differences, and so forth. And lastly, the fourth bucket would be just any any other financial instruments as prescribed by the Securities Industry Regulations to be a security. Smart investing doesn't only impact personal finance, it also impacts the macroeconomic environment as well. And we'll see that shortly. From a personal financial growth perspective, smart investing allows individuals to grow their money over time, achieving financial independence and long term goals, such as maybe buying your dream home or buying that dream car. Smart investing allows for passive income. Investing generates passive income through dividends, interest, or capital gains, which again can supplement your daily salary or pension plans. Smart investing really focuses on risk management. By diversifying your investments, people can better manage their financial risks in the event of any market downturn or exogenous shocks to the system like the COVID-19 pandemic. And let's be honest, the world wasn't ready for a pandemic. So again, by better managing your risk over time, you'll be better prepared for phenomenons like the COVID-19 pandemic. Again, besides personal financial growth, smart investing impacts the macroeconomic environment as well. Smart investing, you can focus on capital formation. Investing provides businesses with capital to expand their operations and innovate and create jobs, which in turn creates a domino effect to propel economic growth. Here, companies can take advantage of initial public offerings. Public companies, for example, can leverage this or we call IPOs to raise funds to better innovate or expand their operations. And similarly, if it's a private company, they can use private placements. Generally speaking, informed and diversified investments by a wide range of investors creates a more stable financial market, which again reduces the likelihood of economic shocks over time. I will now pass the floor to my colleague, Ms. Teresa McFoy, who is the Senior Securities Licensing and Registration Officer. Ms. McFoy will be covering technology and digital finance, as well as virtual assets. Let's warmly welcome Ms. McFoy to the floor.
Thank you, Sean. Continuing from your topic of smart investors, we know that investors today have access to various financial technology as well as digital products and services at the tap of a finger or the click of a mouse. For instance, we can immediately access our bank accounts or make investments using our mobile devices. Innovative technologies and digital advances in the industry have led to rapid and continuous development of products, services, processes, and even business models, some of which include artificial intelligence, or AI as we know it. AI is a technology that simulates human intelligence. It may be useful for investors when conducting research or even when doing risk analysis. There is virtual assets, which will be discussed on a later slide. We have robo-advisors, which can be considered automated financial advisors. Robo-advisors automate the investing process by utilizing technology to build an investment strategy around personal goals and objectives. It can also be useful to manage your investment portfolio. In the context of investment, gamification refers to game-like strategies or techniques employed by companies to keep investors engaged with the products or services being offered. These may include leaderboards, badges, and competitions, which can be found within various apps, such as trading or personal finance apps. There are several benefits to both consumers and companies for utilizing technology and digitization. It may lead to the creation of new products, investors are provided with faster and more efficient services, and companies are now able to target and provide services to a wider customer base. However, there are also risks associated with the use of technology and digital finance. The risk of privacy and fraud are somewhat intertwined. For instance, investors' personal information can be utilized by these technologies and systems could be lost as a result of cyber attacks. Customers also face the risk of system or technology failure, which could result in financial losses. We advise investors to exercise extreme caution when utilizing technological products and services. It is also important for companies to utilize technology in a responsible manner, which ensures that investors are protected. A few minutes ago, we identified virtual assets in the context of digital finance. But what really is virtual assets? Virtual assets refer to any digital representation of value that can be digitally traded, transferred, or used for payment or investment purposes. These include cryptocurrencies, stablecoins, non-fungible tokens, in-game currencies, but it does not include the digital representation of fiat currency. Pursuant to Section 801 of the Financial Services Commission Act, there is a prohibition on virtual assets until 31st December 2025. Companies registered under the Securities Industry Act must adhere to this prohibition and therefore should not offer or engage in these activities.
Thank you, Ms. McFoy, for setting the stage on how important of a role technology plays in the wider financial arena. As the private sector leverages technology and outpaces regulation, it is our job as a regulator to bridge this gap. So, question for you, Ms. McFoy. What are some of the ways that the Commission can bridge this gap?
Hi, Sean. This is an interesting question. And I think that as regulators, we can also start to leverage technology within our own frameworks. In fact, a number of regulators are exploring and in some cases are already utilizing technology to support their policy and supervision efforts, for example, in areas such as reporting and market surveillance. I know in other countries, regulators have created what we know as sandboxes or innovation hubs, which allows financial firms to test technology-related products and services in a more controlled environment. This helps with identifying potential risks even before these products and services are offered to the market. It also helps the regulators to learn more from these tech companies by using sandboxes or innovation hubs. Of course, there will always be the need for continuous addressing of skills gap, which we know that the Commission does by encouraging trainings and other programs to build employee competency. We may require, of course, the expansion of the personnel pool to include technology experts and specialists in new areas as they arise. And of course, we can also establish partnerships within the private sector to create a collaborative environment. The objective of this would be really to promote innovation within the industry, but also to ensure that these services and products are offered in a safe manner within the regulatory framework.
That was very insightful. Thank you again. We'll be hearing from Ms. McFoy later on in the presentation again. But now, the next presenter is no other than Mr. Jahim Francois, Securities Licensing and Registration Officer. Mr. Francois will cover municipal securities and also sustainable financing. Let's warmly welcome Mr. Jahim Francois to the floor. Jahim?
All right, thank you for that, Sean. So before we dive into municipal securities and sustainable finance, I have another poll here. I want to kind of gauge your familiarity with the topic at hand. And so for the poll, the question would read, how familiar are you with municipal securities? And the options here are very familiar, somewhat familiar, and not familiar at all.
And again, we'll give the audience just about 2 minutes to quickly respond to the poll, and Mr. Francois can proceed. Thanks again for your participation. From the poll, it reads that about 50% or half of the audience are somewhat familiar with municipal securities. So again, Mr. Francois, you have your work cut out right now. So can enlighten
Yes.
the audience.
Yes, Sean. Okay. So that's actually good. Majority of the people here are somewhat familiar with the topic of municipal securities. So these municipal securities are debt securities. These are issued by local authorities, such as city or town councils, and these typically pay a fixed interest payment at specific periods, and principal is repaid at maturity. These municipal securities can be issued in any of the following three forms, which are municipal papers, which has a maturity period of less than a year, municipal notes, which has a maturity period of greater than a year but less than 10 years, and municipal bonds, which has a maturity period of greater than 10 years. Just to give a slight insight here, for a local authority to borrow through the issuance of municipal securities, they must be first granted approval by the Minister of Finance and must satisfy all requirements of the Municipal Securities Act. As previously mentioned before by my colleague Sean, this act can be found on the Commission's website under legislations. The local authority must first file a prospectus or offering document, which should contain all material or important information about the offering. It is recommended that potential investors and all investors read the entire offering document or prospectus from the start to finish. Our job at the FSC as the regulator is to ensure that this document contains all material or important information that is necessary for all investors or potential investors. Municipal securities can play a vital role in sustainable development through funding for infrastructure or services that can benefit the Belize economy. Some of the sustainable development projects that municipalities may raise money for include, but are not limited to, infrastructure development such as roads, streets, and drainage, construction for or renovation of public buildings or facilities, emergency borrowing to support local or national emergency or natural disaster, and any other purpose that may be authorized by the Minister of Finance. Investment in municipal securities provides municipalities with the access to the capital needed for public betterment and sustainable development projects. By investing in these securities, investors can benefit from fixed interest payments that are exempted from income tax, business tax, stamp duty, and all other taxes, rates, charged, and imposts charged by the government of Belize. While investors gain a profit from their investments through interest returns, they also benefit from these projects, which are conducted by the City or Town Council. These projects can enhance the public facilities and services that are offered to investors and even the general public. Though investing in municipal securities are quite beneficial to our investors, it is important that you are always aware of possible risk when investing in these types of securities. Please be reminded that these risks must also be disclosed in the offering document that is available. This offering document must be filed with the Commission. Some of these risks include credit risk, which is a risk that the issuer may default on their outstanding debt based on factors such as poor financial health; economic risk, which are uncontrollable events such as economic downturns, natural disasters, or other unexpected occurrences that can disrupt the council's ability to generate revenue and meet its bond repayment obligations, since there will be a decrease in factors such as spending and tourist activity. The call risk, which is the possibility of an issuer to redeem bonds before their maturity date, and this can force investors to have to reinvest proceeds, and it can be at a lower rate. So currently, these are some of the municipal securities in the Belize market, and this is just to show that the domestic market is active. And we have the Belize City Council Municipal Bond, which was an issuance in 2012 to raise funds for public works encompassing streets and drains. We have the Belize City Council municipal bond in 2017. We have the Belize City Council commercial paper, which is a $10 million issuance in 2020 that was used to raise capital to cover existing debts and provide working capital to fund other projects and activities in Belize City. And we have our most recent offering, the San Pedro Town Council Municipal Securities Bond for 2024. This was issued and is a $28 million issuance that aims to raise capital to be used for improving infrastructure and transportation in San Pedro Town. So we're coming up to another poll here, and this is really just to give me an insight into your thoughts and opinions. Of course, there are no wrong answers here. I just want to make that clear. And the question reads, which one of these sustainable development projects do you think can benefit, or most benefit, I should say, the Belize economy? And the options here are energy efficiency systems, public transportation, and the renovation of public facilities such as hospitals and schools.
Thanks again, Mr. Francois. We'll give the audience 2 minutes to quickly respond to the poll. So thanks again for your participation. It looks like from the poll, the audience would agree that half of the audience would agree that energy efficiency systems would be the most sustainable project. Mr. Francois, can you kindly expand on this?
Yeah, so of course, these are all important projects that can help to develop our economy. Of course, based on the responses, it's clear that energy efficiency is something that the Belize people they think that would be the most beneficial sustainable development project. I have no objections there. I do think that this is something important in our economy, especially since the issues we are currently facing with our grid. So to move on, I want to talk more about sustainable financing. And just to make clear, these securities that are issued, these municipal securities that are issued, they are used to raise capital for projects that can also help to promote environmental sustainability, social responsibility, and good governance. And these investments create a positive impact in our country while also generating financial returns for our investors. Some of these factors that are considered when issuing securities are climate change mitigation, pollution prevention, health and safety, human rights, diversity and inclusion, transparency, and risk mitigation. And these factors are considered for the protection of our investors and development of our economy. And the evidence of sustainable financing that we currently have in the Belize capital market is the Belize Blue Bond that was issued in 2021, which sole purpose was for marine conservation, sustainable fisheries, and climate resilience initiatives.
Thank you for that informative session, Mr. Francois. I would also like to add that since this is a global initiative by IOSCO, who is the global standard setter for securities regulation, the FSC is also guided by recommendations from IOSCO's Sustainable Finance Task Force. So just putting that out there as well. As we continue to develop our financial landscape, it is essential that we do so in a sustainable manner. Now, we'll welcome back Ms. McFoy to discuss the last two topics of the day, which are fraud and scam prevention, as well as investor resilience. Ms. McFoy, the floor is yours.
Thanks, Sean. My colleagues and I have discussed the different types of investments, the benefits of smart investing, and both the benefits and risk of utilizing technology and digital finance. However, it is very important that investors stay up to date with current investment scams, frauds, and trends. Some common types to keep in mind include Ponzi scheme. The concept behind this scam is one which involves existing investors being paid off with funds from new investors. Investors are typically promised that their funds will be invested to generate high returns with little or no risk. The second type here is pump and dump schemes. With this, fraudsters artificially drive up or pump up the price of the security through false or misleading statements, and then they sell the securities, the action of dumping. At that point, investors who have purchased the securities have securities that are worth less or even make a loss. With boiler room schemes, fraudsters usually set up shops abroad to go undetected by regulators. They use the features of cold calling and high pressure tactics to persuade investors into buying a security or investing in a business. With impersonation schemes, fraudsters pretend to be registered organizations or individuals, including government agencies or regulators, in order to obtain personal information from investors. At this point, they would either misappropriate investors' financial assets, which can as well lead to losses by the investors. The last one we have on this list is unlicensed selling of investment. So generally what it means is that there is someone who is selling securities that do not have the required license or registration to do so. Of course, this is not an exhaustive list, and we urge you to conduct your own research on the different types of investment scams and frauds. Moving into fraud and scam prevention. Understanding how scam artists work can help you to avoid fraud, and some tips we have here today includes familiarizing yourself with the various investment fraud and scam can help you to detect red flags. Some red flags that you should look out for include: are you being pressured into buying a security? Does the security being offered says guaranteed returns or risk-free investment? Sellers are also providing misleading or false information. Misleading or false information are typical red flags that investors should be aware of. Do not provide personal or financial information such as identification, passwords, or bank information to unknown or unauthorized persons. We encourage you to conduct your own due diligence. This involves thorough research of the company, the investment, and individuals who work for the company. Ensure that this investment is suitable for you and consider possible options before making a decision. As mentioned previously, some fraudsters pretend to be registered firms. Always verify that a company is registered by visiting the FSC's website or by giving us a call. If you would like to file a tip or complaint, kindly visit the FSC's website, and again, you can always give us a call. Remember, if an investment sounds too good to be true, it probably is. Investor resilience, the last topic of the day, refers to how well investors can adapt when there is volatility or rapid changes within the market. Investor resilience encompasses several of the topics that we have discussed through this session, such as understanding market activities, trends, and frauds, conducting due diligence on a product or service, and assessing whether it meets your objectives before investing. A resilient investor also understands the importance of diversifying their portfolio. As Sean mentioned, diversification involves spreading your investments across various asset classes, such as equities or fixed income, to minimize the risk. Think of diversification in line with the saying of, do not put your eggs in one basket. And lastly, a resilient investor has an emergency plan or fund in place for unexpected events or expenses. Do not place yourself in a position to lose more money than you can afford to.
Thank you again, Ms. McFoy. As one of our core mandates at the FSC, we need to ensure that investors are well protected at all times. With that, we will now open the floor for the Q&A session. So again, the Q&A session is now live. Kindly paste your questions, if any, in the chat. I guess for the time being, maybe Ms. McFoy, can you, since you deal with registration, um, can you, I guess, give some insight on the registration process and when it's open, when can you register as a securities business, so forth.
All right, definitely, Sean. So registrations for conducting securities business, as we mentioned, you have to get approval under the SIA. So firms or entities looking to seek registration to trade as principal, agent, arranging transactions, providing investment advice, and few other categories would require registration. Of course, you would need to submit an application package to us, which would include business plans, for instance, internal controls manual, and various other documents that we would need from you. Of course, we ask that if anyone is interested, you can always reach out to us and we would be able to provide more information on this process and what would be required of you.
Sure. And I guess since in that along those same lines, Tricia, Mr. Abner had a question. He said, in regards to qualification and requirements to be able to register as an agent to assist with the development of prospectuses for IPOs and private placement. So really, he's asking, I guess, what guides or qualification or requirements or what makes an individual qualified to do that. So maybe can you give some insight on that?
Yes. So
Sorry.
again, again, Sean. So we would require that any company is willing to provide insights or services for IPOs submit their application to us. Of course, this goes through review by our team, and they would have to submit the documents required along with the application form, which would be assessed. Of course, we also ensure that they are competent, have required qualifications. Persons within these companies are able to conduct the services that they will offer.
Sure. Sure. And again, also to that, along those same lines, really, you have to ensure that the person is really fit and proper for that specific role. And again, the commission has an internal process that we carry out to ensure fitness and propriety. Question from Ms. Shakira. She's asking, are there websites or publications or really available resources that one can find to invest, finding available opportunities? So again, the question is from Ms. Shakira. Are there websites or publications or resources in general that one can find to invest?
So within Belize, I know that whenever there are issuance that, for instance, even with Municipal Securities, there may be publication by these authorities. Similarly, for other institutions which may offer debentures, there may also be publications by them. I think it's just trying to be aware and alert or check websites to see. I don't believe that we publish specific offerings on our website, but it would be more that they would have to visit the websites of these entities to see those.
Sure. And then another question says that I know you mentioned a few debt instruments. How about equity ones? Again, equity, I guess our market is predominantly comprised, and again, due to our developing nature of debt instruments, equity would be majority of the times from the utility companies. So you find like BWS, BEL, and BTL you can purchase shares from those entities as well. And I know you had a few, I guess, comments or questions in the chat if the meeting is being recorded. So yes, just publicly putting it out there that yes, the meeting will be recorded and thereafter will be available on the FSC's website. So you can always go back and watch the sessions as well. Any more questions from the audience?
Okay, Sean. So I see a question there in the chat by Marlene Gardiner. So the question reads, how critical is review of prospectuses to manage investment risk, and what information does it provide to prospective investors? So of course, the prospectus review is critical. We do ensure that these issuers are disclosing any material information. So that would be things like necessary approval and the risk. We check for risk mitigation. We do an analysis of the issuer's financial history, and of course any other information that would be considered as important.
So I guess to supplement that, Jahim, really the prospectus, it's a very informative document. It shares specifically the use of proceeds for the funds. So again, you can see that in there, whether it be capital improvement projects, so forth, so streets, roads, etc. So just to add that.
And correct. And just to add on there as well, the prospectus or offering document does have the amount of interest that would be paid, and it has the coupon rate and everything. So you will be aware of when this will be paid out, and it has information relating to the maturity period.
Yes, because I guess as the investor, you will want to know exactly what are you getting in return for investing in something like this or subscribing to a security. And again, the coupon rate that Jahim mentioned is really the interest rate that you're being paid in any specified period. So whether it be semi-annually, 2 times for the year, annually, and so forth, quarterly. So again, you can find all of that information in the prospectus. Again, we'll give about 2 more minutes for questions. So if you have any last minute questions, kindly feel free to drop them in the chat as well.
I see a question there in the chat from Amanda Rivera. Where can we access more information regarding investing in BEL and BWS? Of course, you can access these information by either reaching out to the company directly or visiting their website. And these companies will have publications about any offering that they have available to investors.
All right, thanks again, Jahim. I know we have our colleagues over at the Belmopan City Council with us as well, and just thanking us here at the FSC for our work. So again, thanks again, Mayor Kowich and team for joining us today as well. I guess with that, we will wrap up today's session. Well, at least the Q&A session. And again, as we wrap up today's session, again, it was very informative, but let's bear in mind that smart investing is not just about maximizing profits. It's about making informed decisions that align with your financial goals and risk tolerance. By understanding the securities landscape, diversifying your portfolios, and staying disciplined, you can navigate market complexities with confidence. Remember, investing is a long-term journey, and smart choices today will pave the sustainable financial growth in the future. Stay educated, stay patient, and let your money work for you. Thank you for being a part of this important conversation today on building a financially secure future through smart investing and a robust regulatory environment. Until next time, thank you. So again, that with that, we'll close today's session. And just again, thanks to everyone in the audience for joining today. For further information, kindly feel free to use the email on the slide above. So Securities General Info at belizefsc.org.bz.